Yo, what's up guys? It's your boy Looney, and today I'm gonna go over why I keep cash on the sidelines even when everyone says not to. Because every time I mention holding cash, people jump in with you're losing money to inflation or you can't time the market. Just stay invested. And although they're not wrong, but they're also missing something. For me, keeping cash on the sidelines isn't about timing the market. It's about getting ready when the market gives you a gift. But before we dive in, quick shout out to the Discord. It is free to join, and I also offer a premium membership, which gives you access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are in the description. So let's actually pull up the S&P 500 or the SPY ETF. And if we go to the max chart or even the 5-year chart, you can see that time in the market beats timing the market. And honestly, that is true. If you're invested for decades, you'll probably come out ahead just staying in. But what that doesn't tell you is this: being 100% invested all the time can leave you with no flexibility when opportunity shows up. So right now in my account, I have margin, but my cash balance is 11,000. It's about like 15 to 20%, somewhere in between that. And you can see here that a lot of it is in options. So with that, I get optionality. So it gives me room to move. So if a stock drops 20 or 30%, and while everyone is panicking, I don't have to sell something else just to buy it. I already have that ammo ready. And it's not about predicting the bottom and trying to time things. It's about having the ability to act when everyone else is frozen. So let's actually pull up an example on Zeta. So Zeta is a stock that I'm interested in buying and just holding. Yes, the market right now is a little overvalued, or stocks are running super hot. So holding stock right now isn't something I want to be doing, because I don't want to be in a situation when the market turns around and I'll be caught holding the bag where my returns are decimated. So instead, I sold a put. And selling a put, you're agreeing to buy a stock at a certain price that you chose, and you get paid to do so. So I have 3 option contracts. One of them actually expired today. The $17 put expired worthless, which is actually a good thing. And I got that net premium and I get my cash back. Same with these puts, $16 put, $17 or $15 put. Now, I wouldn't be able to do this and collect this premium if I didn't have the cash. If I didn't have the cash, I would be forced to sell another stock, whether it be Google or SPY or just any other position. I'd have to sell that and then invest into selling puts. And I don't want to do that. I want to have the ability to have that opportunity cost. So I'm able to invest at times where people are panicking. So let's actually pull up Zeta, because I'm not just doing this randomly times. I'm being very strategic. And if you look at the month chart, it is down 5%. And if we go to this $16 put, for example, I sold it on the 15th. And if we go to the 15th, we could see that it started to drop. And I got notified for that dropping through some of my indicators, so I sold a put. And you could actually dollar cost average with selling options, so that's exactly what I'm doing, 17, 16, and the $15 strike price. So holding cash definitely changes how I think, because when the market dips, I'm not stressed. I'm actually curious. I can actually ask, is this a moment to buy instead of panicking? And that's a huge shift in emotions. And being emotional in investing is very difficult to actually perform well, because you often panic sell or FOMO buy. But when you have cash on the sidelines, it kind of gets rid of that, because if my portfolio drops 10%, I actually see that as an opportunity. And that's when I know, or when VIX increases, that's when I know that now's probably a better time to buy, when there's a lot of fear. And it's a lot easier to stay logical when you're not fully exposed. Now, I'm not saying I sit in cash all the time. That's not the point. You can see here, I'm prepared to use that cash. Right now, cash, again, 11,000. The options collateral is 9,700, and a lot of that is in cash secured puts. So I'm basically saying I'm okay with turning that cash into shares if it goes to a price that I'm comfortable with. I have one on Bull, Webull. This one will probably get assigned, and I'm going to turn my cash into shares, and I'll probably sell covered calls and collect even more premium. Let's look at other ones. I have some spreads. Spreads a little bit more of an advanced strategy. I've been doing them a lot more because the market has been trending upwards and I want to catch that momentum, but I also don't want to buy shares. So doing a lot of spreads. I have those Zeta puts, of course. I have another Webull put because Webull dropped, and that's another example. If I did this one put and Webull continued to drop and I didn't have the cash, I'd be in a different situation. But now I'm able to dollar cost average with selling options. So even if I get assigned on this $10, my average cost would be somewhere in between the 12 and 10. So $11 would be my average cost, or somewhere around there. So we have some in leverage trades. These ones are a little bit more risky, like HIMS. This is a leverage in HIMS. And I'm very safe when I do these, or I try to be as safe as possible, choosing really low deltas. But if you're all in cash, to be honest, you are missing on growth. So I try to sit somewhere in between. I'm invested enough to benefit if the market trends upwards, but I'm liquid enough to stay flexible. Because the best opportunities usually show up when no one feels ready. And we could actually look at that back in April. And I had the chance to open up a SoFi position. And the reason I was able to open up a SoFi position is because of my cash. And I sold as many cash secured puts as I could. Some got assigned, some didn't. But of the ones that got assigned, I'm now up 156%. Now, again, you can't time this, and I wasn't able to time it perfectly, but I sold puts at strike prices where I felt the stock was fairly valued, or not fairly valued, but where I was comfortable buying it. And if we look year to date, we saw that it was briefly under $11 for a moment in time. And actually, these weren't all at the only contract. I had a few at 12, a few at 11, one at 10. So they all averaged into 11.29. But you can see I'm actually up 157%, which is really good, or at least I feel that's really good. And I feel confident, even if the market pulls back significantly, I have that opportunity to buy even more SoFi. So yes, I do keep cash on the sidelines, not because I think I can outsmart the market, but because I like being ready when others aren't. So cash isn't wasted, it's waiting. Now, right now, I will say that the interest, the cash earning interest is low. So I'm a lot more eager to do option trades, but I'll do option trades that are a lot safer, and I try to do them strategically, waiting for stocks to pull back or some red days to sell puts. And that's when I'll deploy my cash and I'll turn it into options. And then if it continues to drop, I will turn those options into shares. And when that happens, we should be in full fear or close to fear. And at that point, it's probably best to be mostly invested. And yes, I do look at the VIX. VIX is very important, deciding on how much I want to be invested, how much I want to stay cash. But this does allow me to distinguish. And we can see here, VIX is sort of in the middle towards the lower end. And holding cash is pretty important right now. And that's why I'm holding cash, but I'm also doing options. So I am ready for any sort of scenario. But I hope you guys enjoyed this video. If you did, leave a like, comment, and subscribe. Until next time, peace.